Hello, everyone. We have a day early live this week because it is our daughter's 17th birthday tomorrow, and Ben has an all-day continuing education. You gotta love it to keep our licenses valid. Let me bring Ben on and request. Just got done crimping my hair during my lunch in between appointments today. Hi, babe.
Hair today.
I knew you were going to say that. I have my little light up here too. What do you think?
It's really nice.
Yep, this one.
Really good. Okay. It's new.
Yeah. No, it's not new. I just found it.
Okay.
New to us because I have a lot of stuff that I find when I clean.
Yeah.
So I was just saying that we're doing our live today because tomorrow is our daughter's 17th birthday, and then we have
Woohoo!
another daughter turning 15 on Saturday. So our babies are growing up.
I know. It's
I
awesome.
just can't handle it. I love it. And anyone who says they don't enjoy the teenage years, I don't get because I love the teenage years. Now, granted, having four in the house at the same time, three boys and a girl, was a little challenging to say the least,
Mhm.
and brought in at different ages of teenagers. So, like learning the dynamic of going from two to 5 to 6 and high school and all of that. The kids always laugh because they say that I'm a much more chill mom now than I was back then. And as Taylor would say, I said if you were 1 minute late in the driveway from your curfew, you were grounded for a week. And now I'm just like, get home safe, guys. Be safe drivers. But the
Right.
littles are like so innocent and cute, and they have learned a lot from their older siblings. So I almost can thank their older siblings a little bit for helping
True. True.
helping that aspect of it. And now they're having kids, which the older ones, which help the babies not want to have kids either. So it's like a full cycle of this. Well, let's get into the business of what we're talking about today. I did want to talk a little bit about the market and what's going on this last week in Pierce and King County. What's really highlighted, let me grab my notes really quick. Oh, things are just falling apart, guys. What has really been highlighted for me this last week, if I can ever get to the point of it, is that in Pierce County, 47% of listings had a price reduction this last week.
Mm.
That's almost half of the inventory had a price reduction this last week, which is that's a lot. So that means that either people were not pricing for the market they were going into and just priced based on now comp. So like when I'm looking at comparing, and we talked about this last week a little bit, when I'm looking at comparing a property to the market, we have to adjust to the leveling out that we're going through right now. And so like if I look at this week, okay, so 47% had a price reduction. I'm going to go look, let's say it's in Puyallup. I'm going to do a 0.5 mile radius and say, okay, out of those, how many of those price reductions were in that area? And what was the average of the reduction to plan for what's coming next? And so I'd rather have them be the lowest priced property on the market to, you know what I mean? You could
Mhm.
potentially, I mean, people are still getting multiple offers and doing that within reason. Then price at the top of the market and having to chase it down like these 47% of other people. And that's just the ones that agreed to a price improvement. You know, there's still a ton of inventory out there that is sitting because so what I will tell you is don't rush into it. If your home is show model ready and you're at 40 days and you still don't have an offer, the average days on market in Pierce County is 78 right now.
Woo.
When
78.
Ben and I started these lives, it was like 25 and people were panicking.
Wow.
Now, what that means though is that is based on there's an average, right? So that's you take all of the numbers and then you divide it by all the pendings and what that looks like. What I will tell you is that it does change by price point. So obviously the higher priced homes are staying on the longest, but you're still looking at 35 days if you're under 500,000 till you're going, most are going under contract. Where I think we're seeing this is this can change based on area too, and new construction versus not, what that looks like. Particularly on our listings, what have we noticed is that there are buyers out there shopping that are not pre-approved. And from agent to agent community, that is a big no-no. We should not be having unqualified buyers in clients' homes. We are setting the buyers up for a disservice, we're setting the sellers up for a disservice, and we're selling yourself up for a disservice. We need to have better conversations and more clear expectations with our buyers going into this market and every market, because what if they don't get qualified for the houses that you're showing them? Even if you've been in this business like 20 something years, interest rates are not what they were 20 years ago, 5 years ago, 3 years ago. That matters. Debt to income is not the same of these people that you've known that maybe have bought with you or their family has bought with you and so on and so forth. Like, we have to get them connected with a lender so that we do not set them up for failure. I'm preaching, but agent to agent community, we have to do a better job of this. We are just hurting everyone involved in the transaction. So we have seen that quite a bit. And what we're going to see is sellers just saying, no, I'm not letting you in my home unless you're pre-approved. That was a market when I started. That's just how it was. You had to send the pre-approval letter because people don't want to get all packed up to leave the home if you're not ready to go. So I'm just preaching from the choir on that. Other things are just hesitation. And so really teaming up with the right lender and the right agent that's going to, I don't want to like necessarily coach, because it is a coaching process, but helping you create that emotional intelligence of like when to pull the trigger, what makes sense, what doesn't make sense. You know, it's a feeling. When you go into that home, you're going to know if it's your home or not, but don't allow your limiting beliefs to hold you back from doing this because you're scared of the payment or you're scared of the future or what that looks like. Like, let's sit down and have a conversation about it again so that you know what the wealth building opportunity is. Because that is scary. You're right. But it's also so rewarding. And as soon as you decide to jump in and take that risk, reward, whatever, however you want to look at it, you're going to be so much further ahead than anyone else, because it is about building wealth in real estate.
Love it.
That was my preaching. We can, if you guys want King County numbers, let me know. The average price rent is still about $3,800 out there a month. So you could possibly closely purchase in King County and maybe look at some of paying off some of your debt by, if you have closing costs in your bank and we can get you closing costs from a seller, you could pay off some of that debt and really get into a home probably for pretty similar in the outskirts of like South King, North Pierce County area. So, and even further out if you wanted more property. Like I said last week, don't wait to get pre-approved and that when you find the house, get pre-approved and wait if that's what's needed. Then when the right house comes along, you're going to be so much further ahead than all these people that are coming and looking at our listings for sure.
100%.
Because like I said, there's a lot of them that just aren't pre-approved or hesitant. And when you feel confident, because we've had the conversations about what your pre-approval looks like, what it can do for you, what your future looks like, not just today, but what does it look like a year from now, 2 years from now? I hear Ben talking to clients all the time about it, right? Like, we're so focused on the now, but what is this going to do for you 5, 7 years from now? I was having a buyer's consultation with Jimmy this morning and his dad, and he's 23. He's so excited. They get it, right? They understand that jumping into this market is a huge opportunity for building wealth. And You know, do some people need a co-signer? Sure. If your family is willing to do that, absolutely. But when you get it and you understand the opportunity that is out there for you, and that you know, like this first home isn't going to be your forever home, it's an investment. We put the investor hat on. Could you live there for the next 5 to 7 years so that you could get to that next house? Absolutely. And I'm just really excited to see I call them kids because they're my kids' age, which is so weird to think of, but there's these young adults, you know, getting out and really making an opportunity for themselves and doing something and taking that risk and understanding the long game in this.
I
That was
love
my preaching. That was my preaching today. So your turn.
I love it. You said so many great points. You know, the one thing I want to add in there is how important what you said was. You had a consultation this morning, is setting up a strategy call, buyer's strategy call, or even if you own a home now, still setting up that buyer strategy call to create your own unique path to what the best wealth building plan is for you. Because it may be refinancing and waiting a year and paying off debt. It may be selling now, paying off debt and going and buying a new place. It may be renting for another 6 months. We don't know exactly what that plan is until we turn the light on. And I know I say that all the time. Turn the light on so that you know exactly the route you take to build wealth in real estate. So, and you said so many great points today. And I love how you said, get pre-approved, get pre-approved, get pre-approved. It goes right in line with what I'm seeing out there. I have heard a lot of people aren't pre-approved, or what is a pre-approval? Because I have people told that they were pre-approved. Nobody even pulled credit. They only sent in a pay stub. They only sent in a pay stub. They didn't actually review income and assets. They ran an automated system rather than actually having a team look at your pre-approval and do like a TBD. So, you know, not all pre-approvals are created equal.
Can we pause that for a second?
Yes.
There's two things I want to say. One, I think we touched on this. Melissa met with a client last week that was listed with another agent who just asked, like, is it normal that I've had 3 buyers fall out because of financing? And as listing agents, we got to do a better job of qualifying and asking the lender these questions. And so through that, I'm going to ask Ben really quick what that means. And when you need to qualify the lender, are they local? Are they not local? Do they, you know, did they look at assets? Did they, you know, verify? Are they fully underwritten? What does that mean to that company? So, you know, did they just do a manual underwrite? I know those questions because I'm obviously married to a lender and it's taken me a long time to understand that. But what are these questions that agents should be asking the lender, Ben, to verify what that pre-approval looks like so that they're not having deals fall apart in financing? And why does that happen?
Couple questions in one question there. I would say, why does it happen? I think it's our fiduciary responsibility as professionals to inspect what we expect. I know we've talked about that before. So if I was a realtor acting as if I was, and a client came to me and said they were pre-approved, the first thing I would want to do is get on the phone with their lender and have a conversation about what type of pre-approval, what options have they went over payments with them, have they went over rates, do they understand earnest money? There's a lot of different things that you would need to know so that you can act and do the right thing when you're talking to the seller or the listing agent on making the best offer for them to either get closing costs or not. If the lender, or you know, you guys haven't done a buyer's consultation and they don't know they need 2 or 3% closing costs because of this special program they're using, and they don't know about it until the end and they don't have it, now we're scrambling as they're under contract with earnest money due and they need 15 grand or 10 grand. So I think asking the questions to them of, that's fantastic, I'm so happy that you're pre-approved, I would love to chat with your lender ASAP. Vice versa, that's the first thing I do when I'm talking to a client who has a realtor. I'm immediately saying, please connect me with them so I can go over kind of, have they done a buyer's consultation, what's going on now, can you get closing costs, to find out how vetted and how amazing they are. Because again, we represent them, and in the future they're going to refer back to us based on how we do the transaction. And if someone does one negative thing in there, that reflects on all of us. So I would say that would be the first question, is to just inspect what I expect. The second thing is to get a little bit more kind of, is it a pre-qual? Understanding the differences between what a pre-qual is versus a pre-approval, and then what is a full pre-approval. What are the differences between them? Because I had a client recently say they were fully underwritten and they didn't even pull their credit. They couldn't even run an AUS, which is an automated underwriting system. And they couldn't even have done this because they didn't do a verification of employment. There's checklists for a lender that they would be able to tell you very quickly that if they say, yes, you're fully underwritten, or you have a TBD, or you're pre-approved, or you're
What
pre-qual,
does
you would know.
TBD mean?
To be determined. So a lot of lenders, and I'm not saying every lender because every lender has different policies, a lot of lenders will submit the file without an address and put TBD and submit it to the underwriter, not an automated system, not a pre-qual. This is the full pre-approval, so that a team of people will actually go through and pre-underwrite that file and give a list of conditions of, hey, we need a letter for this, or we have a question on your income, or you're a union worker, you've had 5 different W-2s in the past 2 years, let's average out that income. Instead of just taking a pay stub that you're making now $50 an hour because you got your raise and saying you qualify for 700,000, and then you come back and unfortunately the average of that income is a lot less, and you really only were making $7,000 a month versus 8, and they qualified you off 8, and now they can't get you approved for the home. And that happens a lot.
Yeah.
In even an AUS or an automated underwriting system, I'm seeing that a lot recently, where they're like, no, I'm fully pre-approved, I'm good to go. And all they did was the lending company just kind of submitted it into an automated system. It spit out exactly what they put in, because if you put in they make $9,000, then it's going to spit out that they're approved for X amount. But if you don't verify the income and assets, that's the real key. If I was a realtor today, the number one thing I was doing is, has everything been verified? Not just by the loan officer, but an actual team, an automated system, verifications, or an underwriter. And if it has, then they're further along than most, because most people don't take that verifying step. So I hope that answers the question.
Well, and I think even taking it further, what does verified mean to that company, right? Just like this client came to you and said that they were fully underwritten. Well, what does that mean to someone else, right?
Yep.
And so I must speak for myself, sometimes hear words and we put our own story on it, or what our understanding is, because what Ben does to underwrite them, when I hear that, I would assume that this company is doing the same thing. And the assumptions and the expectations is what gets myself in trouble. So we have to really stay in curiosity and out of judgment and verify what we're expecting. So if they say verified income and assets, by who? How did you go about that? What does that look like? Because I don't want my seller to get moving out, paying, boxing everything up more than they should have already, think they're doing all these things to come to find out that they're not, because we're 3 days from closing and everything's fallen apart. And that's happening more and more with, I'm seeing, hearing in the market. So let's get Benjamin back on. So that just really, really validate and verify and inspect and qualify, those lenders as well as yourself when you're getting pre-approved to know what their processes are like. So we can start doing a series of questions of even for consumers to ask their lenders or to ask their real estate agents before hiring them, because I am hearing and getting phone calls quite a bit from people that hired an agent. They don't feel like they're doing their job. I look it up and I'm like, oh, wow, nope, you did not help that client at all get their home ready for sale. And I have no problem being honest and sometimes the bad guy if that's what we need to be called, but just really being that fiduciary and making sure that people understand what it takes to sell in this market, and being honest if it's like, hey, you just haven't hit enough days yet. There's a lot of competition out there. Your agent's doing a fantastic job. They're just maybe not communicating, and that's usually why people call other people, is because you're avoiding your client and not talking to them every day like you might need to right now, and just do a temperature check. So, okay,
Well, and
what's next?
it's so important. I want to just wrap up one more thing because I got disconnected there. I apologize. Is as these rates come down, because that's the big topic right now, is the feds are going to lower the rates, the job reports. I'm sure every time we go online, every time you open up your email on Yahoo or Gmail, on the top right, it says rates, lowering, all these different things. And that's phenomenal for our industry right now. But as they're lowering down, it is so important to get a full pre-approval and set yourself apart from those other consumers that aren't fully pre-approved. That's where the new deal is going to be. That's where the opportunity is going to be, by you going out and getting fully pre-approved. So that when you go, you can close in under 15 days and you can do these things where other clients now are behind. So when you're competing in an offer on a home that you really want, and there's two different clients, and the seller knows that this one is fully ready to go, has vetted, has done everything, they're fully pre-approved, and this one still needs work, they're more likely to take the one that's been fully ready to go. And so that's my preach today, is make sure that as these rates comes down, that you know where you're at, that you inspect what you expect. So your expectations of being fully pre-approved are ready. A lot of people in the past would wait because they have really good credit and they know they make good money. And then they would wait to find the house and then go get pre-approved. And that was like my parents and that generation was, we're not going to do that until we're ready. Now that's not a good idea. That is how you end up paying too much and something happens, because there's a lot of different loan programs and these things take time. And we just need to make sure that we do everything up front for you and turn on the light so that you're taken care of.
Mm-hmm. I agree. I think that, like I said again, get pre-approved and wait versus waiting till you find the right home and then getting pre-approved.
Yeah.
I know it's like date the rate, marry the house. Like, okay, that didn't phase well, but this is not a decision. It's not going to hurt you. It's not going to do anything. It's
No.
just financial planning 101 to help
Strategic.
you get where you need to be. And I will tell you, like Ben said, when you've got it fully underwritten and you really know what that means, as an agent, the confidence going into that offer, whether the seller or you really want to close in 21 days or 15 days, is that confidence to give that seller that you have done your part, and to go to from that buyer's agent to that listing agent back to that seller. That is huge, because there is a lack of confidence and trust in the general public. So being able to stand on business with what you've got, that's a really, really big deal and a huge selling point when working with our team.
100%. One more thing I wanted to talk about today is paying points and the advertised rate. As these rates are coming down, I've a lot of questions. People are saying, I've seen rates in the 4s and in the 5s and in this. Current market rates and rates in themselves are as low as they're going to be. In order to get better than the advertised rate or the rate that's out there, you're going to have to pay points. So read those asterisks. Know for sure when you run your credit with them and you do this, if they're quoting something lower than everybody is quoting you, the people that you trust or a local lender, make sure you just read the fine print and get an actual estimate. Because if you just start signing things and hope that they're going to do it, at the end, there are so many different things based on credit score, based on income, based on assets. There are so many different loan programs, all of them with different rates. On top of that, depending on what you pay right now in a rate decreasing market, which we're in, if you pay thousands of dollars and that rate drops and you're looking to trim that off or lower that rate again in the future, all that money that you just spent now is wasted because the company keeps it unless you do a strategic, like, temporary buy down, which is very important to have a conversation with these lenders that you're dealing with. If you have questions, always reach out to me. Even if you're currently in a situation where you're already halfway through it and you just don't understand and they're not explaining it, I will be happy to evaluate it, have a conversation, and give you the right information so that you can be better in that transaction, even if I'm not doing it, because I want to make sure you're taken care of.
Yeah. Sometimes we have to use certain people because it's our mom's best friend or our cousin or sorry,
Yep.
the dog's barking, really any one of that. And so, we just want to help you. And, in turn, hopefully you send us someone that's looking to buy, sell, or invest in the future. And if not, that's okay too. We just want to educate and make sure that our friends and family and friends of our friends and family in the community are well taken care of.
Agreed. Last here is the to do. This is a good one. You need to, and you to do, keep all forms of debt paid and current. So when you're looking to purchase or invest in real estate, or you're in the transaction, unless specifically instructed to miss a payment or do something along those lines from your lender, which they rarely do, please make sure you just continue to pay those on time and keep them current so that your credit and your debt load does not fluctuate, so that maybe you fall out of approval while you're trying to close in a time frame of what's on the contract on a purchase and on a refi in case that. So just make sure you're keeping that up. And if something happens to where you can't, or something needs to change, just communicate with your lender or all your professionals so that we know exactly what the next move, or we can guide you in the right direction.
Yep. It's always good just to double check. We stress that with our clients so much during the process. I mean, we've had clients that are like, "Hey, my daughter needs to borrow $1,000. Is that okay? Her
Yeah.
utility bill's late." And it's like, "Okay, hold on. Let me get a hold of Ben. Let me see what's going on." And I know that sounds silly, but it's always smart to just double check. I mean, if you go out to eat 3 times a week, continue to go out to eat 3 times a week. That nothing changes. Just do what you normally would do. I mean, you probably don't want to if you're going to be buying a house and
Yeah.
doing those types of things, but you also don't want to be house poor either. So you don't want to change too much of your lifestyle, but you do have to understand that, we're investing in your future. And sometimes it's okay to give up to go up.
You're on fire today.
Yes, it's the hair.
It's there.
It's the hair. Okay, well, I love you, babe. Thank you for doing this today.
For sure.
And
And thank you for
we're
watching,
gonna have a good.
everybody on
Yes,
here.
thank you
Thank you for
guys.
watching.
Thank you for sharing. Thank you for liking. Thank you for commenting. We've had great conversations with people from these lives, and that's why we continue to do them. And so if you know of anyone that would benefit from this conversation, please share it with them. Or if you feel so inclined to share it on your Facebook feed, we would greatly appreciate that.
Yep. Take
Have a
care.
good
Next
day.
week.
Bye.